This is Japan Business Weekly from Tokyo. I'm Dalton Tanonaka.
And I'm Mei Lee. In our program today, the bribery trial of a former construction minister begins, but Kishiro Nakamura denies he acted as the middleman in persuading a government agency to drop an investigation into a group of construction companies.
China reveals ambitious plans to tune up its car industry, but visiting government officials note restrictions on foreigners.
And while the weak dollar has hurt major Tokyo stocks, some smaller issues are in very good shape.
Stability returned somewhat to the Tokyo financial markets this week.
But there was no change in the basic trend toward a stronger yen and weaker blue-chip stock prices. The dollar closed a quarter of a yen lower than it started the week at 98.53 yen. Tension was the watchword in the currency markets as traders anticipated the G7 economic summit. The strong dollar kept a cap on Tokyo stocks, with the Nikkei 225 edging nearly 17 points lower.
And we will have our regular full survey of market activity later in the program.
A former construction minister implicated in bribery allegations that hit nearly every major construction company in the country went on trial this week. When arrested in March, Kishiro Nakamura refused to even confirm his name during questioning by prosecutors. As NHK's Marina Kamimura reports, he was only a little more forthcoming in his first court appearance.
Former construction minister Kishiro Nakamura admitted in court Tuesday that he did accept $95,000 back in 1992. But he said the money was a donation, not a bribe. And the former vice president of construction giant Kajima backed up his story. Shinji Kiyoyama said the money was intended as a political donation. But prosecutors say after he received the money, Nakamura persuaded the Fair Trade Commission to drop its investigation of a group of construction firms. Those firms were suspected of bid rigging. The trial of the former up-and-comer in the Liberal Democratic Party attracted about 300 spectators, who began lining up at 6 o'clock in the morning attempting to get into the Tokyo District Court, but only 50 managed to get in. When proceedings began, the casually dressed Nakamura emphatically denied the money was a bribe, saying, quote, "The $95,000 was a political donation from the construction industry for political activities to reform the industry as a whole." Back home in Ibaraki Prefecture, north of Tokyo, Nakamura's constituents say they still support the local politician.
I'll feel a bit betrayed, but I think I'll still support him.
The Murayama cabinet's new construction minister said Tuesday he hopes something positive can be built out of the case.
We need to win back the confidence of the people. In order to do so, I have to continue with the steady reform of the bidding system in awarding projects.
Defense lawyers tried to get both Nakamura and Kiyoyama released on bail Thursday. Both requests were denied. But legal experts say, given the history of similar trials, it may take another 5 years before a judgment is handed down. Marina Kamimura, NHK, Tokyo.
The current account surplus showed its first substantial sign of shrinking this week, just as Japanese leaders were preparing for G7. The finance ministry reported Monday that the current account surplus plunged 37.6% in May from the month before to $8.7 billion. Year on year, it fell 6.7%. The government credits surging imports triggered by the strong yen. The current account is considered the broadest measure of trade because it includes royalties and services as well as merchandise.
It started out as a public hearing on a proposal to lift a ban on U.S. Apple imports this winter. But many farmers ended up protesting against the government for not hearing them out.
The purpose of the hearing was to get as many opinions as possible. If that's the case, you should be letting all of us in to speak out.
In addition to the 100 people who won a lottery giving them the right to have their opinions heard, only 18 of 300 spectators who showed up on Thursday for the Agriculture Ministry hearing were allowed in. Farmers say they don't trust government assurances that the fruit is free of pests and diseases.
I'm very worried about the quarantine system. The ministry says it's perfect, but since the Second World War, there have been many serious instances where the system has failed. Don't forget, the farmers have had to pay for the mistakes.
Earlier this year, agriculture officials declared that U.S. apples were safe. Public hearings are the final step in clearing the way for imports.
Although rice farmers won't be getting paid more for their products this year, they will be getting a subsidy boost. The coalition government and the Agriculture Ministry agreed to keep the price it pays farmers for rice at $1.25 a pound this year. But farm subsidies will be raised by $121 million. The government says that will mean an increase in income of nearly 4% for the average farmer. The agreement is seen as a political victory for the ruling coalition, whose members rely heavily on the farm vote. The ministry had fought to reduce payments to bring domestic rice prices more in line with cheaper imports. The chairman of the Japan Federation of Employers Association criticized the decision. Takeshi Nagano said it was wrong to make a business decision based on cultural and emotional concerns. By law, farmers must sell all their rice to the government, which then sells it to distributors.
On the eve of the G7 summit in Naples, Japanese leaders announced their biggest economic aid package ever to South Africa. The $1.3 billion is designed to help stabilize the South African economy, as well as strengthen trade ties that survived the years of apartheid. The package, which is immediately available, includes $800 million in loans and technical assistance. An additional $500 million is in trade insurance to encourage Japanese firms to invest in South Africa. Trading house Nishi Iwai, which was a pioneer in that country, questions the effectiveness of that part of the package.
South Africa has many giant companies which can fend for themselves. They would rather not have foreign investment with many strings attached, as is often the case with Japanese money.
South Africa's President Nelson Mandela praised the package, saying it is a symbol of Japan's seriousness.
Coming up later on Japan Business Weekly, why more Tokyo investors are seeing value in small stocks.
And just ahead, China plans to build up its auto industry in a big way, but officials visiting Japan hint the window of opportunity for foreign car makers will be limited.
China feels it's better not to have too many foreign manufacturers enter the country. But for those that are allowed in, we want them to come in soon so that we can get going efficiently.
Imported car sales continue to grow much faster than domestic sales.
Honda USA continues to be the top seller here, followed by Germany's VW Audi and Mercedes. But America's big three car makers did a great deal of catching up in June. The Automobile Dealers Association says Honda USA outsold America's big three car makers combined. But the U.S. companies reported a combined sales rise of 90%, with Chrysler doubling sales and Ford nearly tripling sales from the year before. The Automobile Dealers Association says overall import sales rose nearly 43% last month to 29,725 units.
Well, China revealed a major plan this week to develop its car industry. That announcement coincided with a visit by Chinese officials to the factories of various Japanese automakers.
The major players have shied away from the Chinese market in the past and are now looking at new investment opportunities. NHK's Fred Katayama joins us now. He's been covering the delegation's activities this week. Fred, is there any direct connection between the visit and the timing of the announcement?
Yes, there is, because industry officials actually hammered out that new policy in February. But it took some time for them to finalize the actual plans. Now, since the annual meeting with Japanese officials is planned for July, they decided to wait until this opportunity to announce it.
Japanese automakers have something to clap about, as a contingent of top officials from China visited this week. On Monday, China unveiled one of the biggest expansion plans ever announced for its car industry. It said that by the year 2000, it wants to supply 90% of market demand with domestically produced cars. It wants to consolidate its 120 manufacturers and wants producers to use locally made parts. The need to boost production could pave the way for Japan's biggest car makers to invest in China. In the past, those companies steered away from investing in the Chinese market, considering it too big a political risk. Of Japan's 11 vehicle makers, only the minor players produce vehicles in China.
Things are going well for Fuji Heavy Industries, Daihatsu and Isuzu. They're expanding production scales and making money.
Every one of Japan's automakers realizes the importance of China's market.
China has already given the green light to international giants like Chrysler, Volkswagen, and Citroën. Right now, Beijing limits foreign participation to the companies that are already there. But now that the market is speeding along, Japan's big boys want to shift gears and get in. China's car market is expected to more than triple to 1.4 million vehicles in 1994 compared to 5 years ago. But one of the delegation's top officials hinted that the door to foreign investment in finished assembly isn't wide open.
The world's automakers say they want to get into the Chinese market. China feels it's better not to have many manufacturers enter the country. But of those that are allowed in, we want them to get in soon so that we can get going efficiently.
For the moment, though, the Chinese are encouraging the Japanese to first invest in parts production.
We told the Chinese that we traditionally send our car manufacturers overseas first, to be followed by parts makers later. We had a difference of opinion. The Chinese said they already had 120 car manufacturers, so it seems they want to strengthen their parts sector.
Accordingly, the delegation quizzed Nissan on how to price parts.
Let's say you quit production of a car 10 years ago, but you have to keep making spare parts for 10 years. Because production is limited, the costs to the company are high, and you may not even break even.
The Chinese market doesn't have many cars, and its history is short compared to ours. So they do not have a strong concept of keeping parts in stock. I felt they asked very fresh but naive questions.
The Japanese are more interested in whole auto assembly than in parts. They make fewer percentage of their components in-house compared to the Americans. But for the Chinese, the sum of the parts is of greater interest now than the whole. And this just came in. Japanese and Chinese officials just held a press conference late Friday evening. And the two sides agreed to hold a third meeting next year, possibly in Beijing, this time focusing on holding a convention and focusing on parts and technology. And things seem to be going towards the Chinese way. According to some of the Chinese officials, some Japanese members of the delegation said that they expressed interest in visiting China sometime in August or September to discuss possible investment in the area of auto parts.
Fred, thank you for that report and for the update. We have other news now. The major supermarket operator Seiyu and the Mitsubishi Trading House say they're working on a joint venture that could make them the first foreign store operators in Vietnam. Seiyu says the Vietnamese government asked it to work with a public food corporation in Vietnam. Seiyu says the venture should be finalized within a month. The planned store in Hanoi will target foreigners and wealthy locals. First-year sales are pegged at $2 million.
China is putting tough new restrictions on its film industry. The official China Daily says new policies announced by the government will allow only 30% of the films shown in movie theaters to be from overseas. Joint productions with foreign film companies will be limited to 30 a year, with an additional requirement that all those films be completed within China, and with the Film and Television Ministry having the final word. China has recently expressed its disapproval over a number of jointly produced films that have been very successful overseas, but banned at home.
Investors were distracted by prospects for currency action at the G7 Economic Summit this week.
That kept the stock market directionless, but the low dollar kept the pressure on major stocks. Indications of increased consumer spending boosted the market early in the week, but prices then slipped and volume shrank as the week drew to a close. The Nikkei average ended nearly 17 points lower than last Friday at 20,526. The Topix fell 1. Volume slowed from last week. Many investors continue to hold stocks but are not doing much buying and selling. Market bellwether Nippon Telegraph and Telephone fell nearly 3% on the week. JR East was down more moderately. Traders say NTT's decline had very little to do with a raid on company headquarters and other company offices Friday, following the arrest of a company section chief on bribery charges. NTT's Masaki Takayama allegedly accepted a $200,000 bribe from a catering company in return for awarding the concession to operate an NTT cafeteria. Authorities say he may have needed the money after losing $1 million in the stock market. Medical supplies maker Terumo said it has developed a 3D television in conjunction with Nagoya University that doesn't require special eyewear. Terumo is studying the possibility of mass commercialization. Its stock price rose a whopping 22% for the week. In the currency markets, the dollar gave up another quarter of a yen to 98.53. In the money markets, the overnight call rate edged higher. The 3-month CD was slightly lower. The 10-year Japanese government bond was just slightly higher. The 30-year U.S. Treasury dipped.
While the Nikkei has been following the dollar's path down, over-the-counter stocks have been climbing higher. The OTC index closed at 1987 on Friday, up nearly 32 this week. That was just slightly off its high for the year reached earlier in the week. Analysts say the smaller stocks are seen as being more domestically oriented and less sensitive to moves in the dollar-yen exchange rate. The solid performance may also be a sign of a fundamental change in the business environment here, as NHK market correspondent Alan Hodges reports.
It's one of the fastest-growing emerging markets in Asia, partly because it offers the stability of the world's second-largest economy, which itself appears to be recovering. The Japanese over-the-counter market rivals other Asian stock markets in size, with a market capitalization of $150 billion. Only Hong Kong, at $250 billion, is significantly larger. But it's still a waiting pool compared to the ocean-sized first section of the Tokyo Stock Exchange. Its total value is just 4%. But fund managers are diving in search of the next Hondas and Sonys of the world.
As the pace of economic growth slows down, the economy is becoming more service-oriented, and so too are industries. Times such as this create many new business opportunities.
That excitement has helped the OTC market outperform the broader-based topics so far this year. It's up 50% in dollar terms and 33% in yen terms. That compares with 31% in dollar terms and 16% in yen terms for the benchmark topics.
The yen impact to the market is much smaller than yen impact to the topics, because most of the OTC companies are domestically oriented.
But even though almost all analysts are extremely bullish on the OTC market, they say it's not for the faint of heart because of the lack of liquidity.
If the market goes up, it's okay. But once it changes direction, it's very hard. Very easy to become half, quarter, or in terrible case, stock price may down to 1/10. Or worst case, a company may disappear.
Analysts expect the OTC market to continue to perform well through the summer. Japanese investment trust funds alone will be pouring in a net $500 million in the next 2 months. Alan Hodges, NHK, Tokyo.
Well, joining us now for the Tokyo market's up-and-comers, insights into the up-and-comers, is Mike Morozumi. He's an analyst at Bearing Securities. Well, Mike, first of all, are we seeing the new Sonys and Matsushita's in these OTC stocks, or is it just all hype, or a little bit of both?
I think that the reason why the OTC market is doing so well is the fact that you're going to find the economy is very mature now, so the recovery this time around will be much different than in the past, and consequently the only growth you'll see in a mature economy is the smaller cap stocks.
Mike, the rally in larger stocks was triggered earlier this year by expectations of higher earnings. In the same way as the OTC rally was triggered by expectations of the effectiveness of a deregulation package and further deregulation. Isn't that dangerous if these hopes aren't realized?
Well, given the strength in the yen right now and its implications for a prolonged recession in Japan, I think that people are finding that there's still good value in the OTC stocks because of the fact that they can grow despite a relatively mature economy by taking market share away from possibly its bigger competitors.
Well, given that, then, do you see OTC market growing even further and outperforming major stocks?
Yes, that's our outlook, that probably over the course of the next 2 to 3 years, not only will they benefit from deregulation of the Japanese economy, but they will begin to capture market share because they're much more flexible, much more maneuverable than, say, the bigger companies, and consequently they're able to adapt much better to the low growth environment that's about to be upon us.
Mike, you spend most of your day, covering small caps. Let's get specific now. What areas within these smaller markets should investors be looking at?
I think one of the areas that the investors should be looking at is possibly service sector related companies. One good indicator is the fact that service sector companies account for less than 10% of the first section and second section. However, they account for about close to 30% of the OTC market indices. Consequently, most of the growth in the Japanese economy until now has been in the manufacturing industry, while the service sectors have been neglected, and consequently we expect the big growth in the low growth environment and against the backdrop of the strong yen to be in the service-related areas.
So what would be specifically some of your picks?
One company which we're pushing right now is a company called Daiichi Clinical Laboratories. This is a play on the separation of pharmacies from hospitals because there is an emphasis by the Ministry of Health and Welfare to lower medical expenses, and one way to do this is by separating the pharmacy out of the hospitals. It eliminates the tendency for doctors to prescribe medicine.
Most of the buying in the secondary issues have come from investment trusts with foreigners sitting back. Is this a good or a bad sign?
I don't believe that's necessarily true because we do see, at least through our business, that we still see quite a bit of interest in small cap stocks from foreign investors. So I maybe cannot speak for the rest of the market, but at least in terms of our business, we still see most of our business, the bulk of our business, from the foreign investors.
Well, liquidity is always a problem when dealing with smaller stocks. How does Japan's OTC compare with maybe other regional markets?
Liquidity is very small, typically in the small cap stocks, OTC stocks. However, one thing to remember when investing in the OTC market is the fact that price levels are very, very volatile, and when prices are very, very low, typically investors don't want to sell. Consequently, volume does not appear in the market, but once price levels come up to adequate levels, then investors are convinced to sell or to release their shareholdings, and consequently liquidity does appear. So it's a very, very tricky situation regarding liquidity.
Okay, well, Mike, thanks for coming in for us today.
Thank you.
Well, still ahead in Japan Business Weekly, why Mother Nature can sometimes do more for the economy than the central bank.
We'll tell you how hot weather helps increase the pulse of cool sales. We have some corporate developments this week. The biggest maker of Chinese medicine in Japan was ordered to pay $4 million in taxes and penalties. The Tokyo Tax Bureau says Tsumura hid $10 million in kickbacks to doctors and hospitals. The rebates were entered on the company's books as research fees. Those are tax exempt. Two major real estate-related bankruptcies in as many days rock that industry. Sources say Nippon Mortgage will file for liquidation within the next 2 months. And debts of $4.7 billion will make it the third biggest bankruptcy case in post-World War II history. The 12-year-old company grew dramatically during the economic boom years of the 1980s, but analysts say it overextended itself and was too exposed when the economic bubble burst. The private research firm Teikoku Databank says real estate developer Grandi is sinking under debts of more than $1 billion, the third biggest case this year. Grandi bought up apartment houses in central Tokyo using $600 million in loans from an affiliate of Tobu department store. Tobu says it has been unable to recover that money. You know, the yen hasn't been the only thing on the rise here. It has been hot, coming close to 96 degrees.
That's right, and it was a very moist 96 degrees. Yeah. But the rise on the thermometer is boosting sales of heat-beating items, and analysts say it could be a sign of hotter economic times to come. NHK's Brianna Zaldivar reports.
As sweltering heat descends upon the streets of Tokyo, hordes of shoppers are heading inside and buying seasonal goods. The hot days of July are providing a much-needed boost for domestic sales after last year's cold, rainy weather when sales were down. Demand for electricity is sizzling, partly due to red-hot air conditioner sales that have already surpassed last year's totals.
Last year was just a disaster. The most we sold in one day was 150 units. But this year, we've already sold 300 units in a day without even trying.
Another summer favorite is ice cream. Häagen-Dazs reported an increase of sales this month, up 30% from last year.
Last year I had 30 ice creams. This summer I hope to have 60.
July is typically the highest month for beer sales. Kirin, Japan's leading brewer, says just a 10-degree Fahrenheit rise on the thermometer will raise daily beer consumption by about 133,000 19-ounce bottles.
The hotter it gets, the more the sales rise. I just hope the heat scorches on.
The thermometer isn't the only reason for sales heating up. A summer income tax rebate is also burning a hole in consumers' pockets.
Consumption sales this year should be higher. This is due partly to the income tax cut and is a bright sign for the economy.
Trading partners have been and will continue to demand that Japan stimulate its domestic economy. But the increase in sales could take some heat off the new prime minister. So economists say just as it deepened the recession last year, nature is having a hand in turning things around this summer. Brianna Zaldivar, NHK, Tokyo.
Yeah, exactly. My thoughts exactly.
Yeah.
I can't take this kind of heat.
Right, you can use good old fan power, too.
And that is Japan Business Weekly for this week. I'm Mei Lee.
I'm Dalton Tanonaka. Thank you for watching. Please join us again next week.